Hey guys, so really urgent message as the Bank of England have literally at this moment increased base rates to 1.75%. You remember from my last update when it was 1.25%. I wanted to go through and make this very short video to share what's happened, share what we should do next, share how it would affect people on a day-to-day basis, as well as give you tips on what I think you need to start to do on the back of this rate rise. So first of all, what has happened exactly? So the bank rate's gone up, the base rate's gone up to 1.75%. It's the biggest rise in interest rates in 27 years, the highest it's been since 2008. And the backdrop of, as we all know, the backdrop of these rate rises has been because of inflation. And I've just gone and read the Monetary Policy Committee minutes of meetings notes before making this particular video, and the majority vote on that particular meeting was 8-1. So 8 people voted in favor of a 0.5% increase in interest rates, and 1 person voted against that, which gives us a sign of where things are heading. And the fact that they've increased this by 0.5% tells us that in their next update, by the way, which will be in September, I believe the 15th, that we should expect another 0.5% increase, but we'll see how that proceeds. Also, they signaled and mentioned that in Q4 of 2022, the interest rate, the inflation rather, will be hitting, CPI inflation will be hitting 13%. Again, a much higher rate than what was forecast before. Now, how does this affect people? Okay, so the first thing to mention is if you've got a fixed rate mortgage right now, this does not affect you, okay? So you're not affected by this right now anyway. The people that get affected by this are people who are on standard variable rates and those on tracker mortgages. So, and however, if you've got a loan or a credit card, or if you've got savings even, these rate rises might actually work, first of all, against you if you've got loans or credit cards, or might work in your favor if you've got savings. If your mortgage companies or your banks are actually going to factor in the base rate increase, perhaps in your favor or perhaps against you if you've got loans or credit cards. But generally, a lot of loans and credit cards and things aren't linked to the base rates. The base rates mainly affecting mortgage products. Now, how does this affect you? I ran some maths, quick maths on a mortgage calculator. If you've got £250,000 mortgage over 25 years, let's say your mortgage rate was 1.25% before, you would have been paying around £971. With this increase of 50 basis points, 0.5%, your mortgage product, your monthly payments will go up by around £58 per month, which is a pretty significant amount to see as an increase, on top of what's going on with the cost of living crisis, with most people barely getting by when it comes to rising prices of food, energy, and so on. Okay. Now, it's worth mentioning that there are around, in terms of who this will affect, there are around 850,000 properties in the UK on tracker mortgages and around 1.1 million on standard variable rates. So around 1 in 4 mortgage holders, around 20 million people, will be impacted by this increase. Around 33% of people on fixed rate mortgages will see the increase affect them as soon as, it will be a bit of a shock as soon as they come out of their mortgage products in the next 2 years or less. Okay. Now, this obviously is coming at a really bad time as most of us struggle with the cost of living crisis, as I mentioned. But I'm just here, I wanted to share what the news is, as well as share what we should do next. Now, when will this kick in? Okay, so we've had the news, when will it kick in? The expectation is that you start to see the increase affect you from the beginning of next month. Okay, that's typically what tends to happen. Now, what should you do now on the back of what I've just said? Well, the obvious thing, if you haven't done this already, is to go and get yourself a fixed rate product. If you've got a mortgage, you should be on a fixed rate already. If you haven't, please go and get yourself a fixed rate product. The next is to overpay on your mortgage if you can. This reduces the capital element of your debt and reduces the impact of compounding as that debt compounds a lot more as interest obviously increases. Compounding, the effect of compounding rises a lot more. So if you can, and I know obviously most people can't overpay, but if you can overpay, then it will definitely be worth your while doing so over time as interest rates are set to be heading in one direction. The next obvious point is to try and earn more if you can. Do whatever you can to raise your income in different ways. We've created various pieces of content around creating side hustles, perhaps trying to get a pay rise at your workplace and so on. I'm going to link some of those resources below as well as above for you to head over and check them out. Now, I want to speak specifically to young people or people who are trying to get onto the property ladder and things like that. You might be thinking to yourself, well, actually, this is a really difficult time for me because I'm struggling, the interest rates keep rising, property prices keep rising and so on. And I really sympathize with that. And I was thinking about that with my wife, Mary, this morning because it's a really challenging time for a lot of people. But I want to say to you guys, when I started my journey, when I gone to the property ladder, I got on at 5.99% in June 2008. Okay, interest rates were super high. So I'm saying all that to say that I really understand where you are right now. Although things are going to get worse and expected to get worse, if you are trying to buy a property you're going to live in, then buy the property you're going to live in. Go ahead and think long term and make that investment. If you're buying a property for investment purposes, then obviously it goes without saying that you're making that purchase for investment purposes. But overall, please stay encouraged. Let's stay practical, let's stay sensible in these times, and do your best to look out for other people who are struggling during these very challenging times financially. All right, thank you guys. Speak soon.